Kitco Mining Special Coverage of PDAC is brought to you by Gold Mining, Uranium Energy Corps, and Uranium Royalty Corps.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Prospectors and Developers Association Conference in Toronto, in Canada. There are a few people in this business that can be called an industry titan, and my next guest is certainly one of those. He's arguably the most well-known name in the business, and he's coming straight from his keynote presentation here at the PDAC that seemed to have drawn half the attendance. Eric Sprott, welcome to Kitco.
Hey Paul, good to be here.
As I mentioned, you're a titan of the metals investment industry, and you've been a champion for decades, particularly for the precious metals. Through Sprott Asset Management, you continue to innovate through the creation of exchange-traded products, including for uranium, copper, in addition to the precious metals. Let's go back to the beginning. What got you interested in the precious metals in the first place?
Great question. I was a small cap manager at the time, and I'd done very, very, very well. I used to compete with a couple of guys as who was going to be the best every year, and I won my fair share of that. But then along came 1999, verging on to 2000, and I'd come to the conclusion that the NASDAQ was very, very vulnerable, and the markets were vulnerable. So I did a little research to try to figure out how my client's going to survive this. Okay, and I came to the conclusion that gold and silver would be the answer, both the physical metals and the shares. So as the bear market unfolded, we were short the market, we go long gold and silver, and I had probably my best years ever in 00, 01, and 02 in terms of performance. And a lot of it from gold. Gold stocks from 2000 to 2011 went up 17 times. That's such an absolute crazy outperformance that it differentiates. And I'm still in it. I was making the comment in my address that 3 or 4 Mondays ago, gold and silver were up strongly. I purchased gold and silver in 2000, still had it, every ounce.
So it's what, $230, $280 an ounce?
Yeah, well, $260 or so, yeah. And based on the change in the price of gold and silver that day, 3 or 4 weeks ago, I made 30% on my original investment that day, which is a statement about patience and holding on and believing. And of course, as the price goes up, now it's $2,900, it's easier, right?
So your smile gets bigger and bigger.
You know, like a day like today, you have $25. Okay, I don't want to put what that would be. That's 10% right there on my original cost, except the value of it's gone up by 10 times. So you get it.
Yeah, okay. Now, you've been serially successful with many high-profile, massive wins, such as Kirkland Lake Gold. What drives you to keep going? Is it the thrill of the deal? Is it the thrill of the win?
Well, it's fun to go on a search. I describe my investment policy as stealing value. So you're always looking, and you know that the market is so massively imperfect that if you can find something, particularly in precious metals these days, they're so inexpensive. I mean, I pretty well every company I would look at, if I was to look at it, their net asset value versus their stock price, and these are smaller companies, they're probably all 10 to 1. You know, it could be a 10-bagger. If it ever makes its NAV, which is a conservative calculation, it could go up by 10 times. Well, what if the deposit gets bigger? What if the price goes up? The price of the product goes up? You know, it could be an easy 20-bagger. So that's a nice opportunity to create value for the family office.
Now, back in the early 2000s, you were on the front page of the National Post, pushing a wheelbarrow full of gold. What inspired that photograph? And with gold prices now at record highs, would you reprise that photograph, but perhaps you'll need a forklift truck this time?
That must have been a fake picture, because I can't imagine me with a wheelbarrow full of gold. They were making fake pictures back then. But obviously, I was a believer, okay, and I was a proponent and outspoken about it. You realize that, well, gold had gone down a lot. I mean, what was the high? Was it like $1,000 in 1980, and here we're in 2000, it was $250? And well, if that goes back up again, and maybe a little extra, and it did. It went up to almost $1,900. There can be one hell of a payday. And of course, I was also a great believer that the stock market was very, very vulnerable, which of course it was. And that was the biggest takeaway from it, that, NASDAQ went down 80% back then. So you had to avoid that as a portfolio manager.
Do you see the stock market as being vulnerable today? People talk about the need for a massive correction.
Absolutely. I'm short the market now. I'm only short about 5% of my portfolio. But the favorite names like NVIDIA and Amazon and Apple, and some of those I've got lots of losses on still. But when I look at the monetary policies we had, the zero interest rates for whatever number of years, it's just so ridiculous. And even the sort of gong world that we have now, and here we are sitting here on March 3rd, and there's going to be theoretically tariffs on March 4th. And none of us know what to think of it, really.
Yeah.
What's going to happen?
It is a bit of an uncertain situation. Now, Eric, you're also known to have a penchant for silver, and you've been the biggest investor in the silver space in recent years. The silver market is in a sort of technical deficit. More is consumed than is produced from mining. What do you think is going to happen when industrial demand for silver, such as for solar, which grew about 27% last year, depletes the inventories historically used for investment and store of value?
Right. I think silver is going to skyrocket. In my speech, I suggested that Michael Oliver, who writes the Momentum Structural Analysis, I think his ultimate target's 250 on silver.
250?
250, yeah. And I believe it. And there was another gentleman, Don Durrett, who analyzes small cap mining companies, and his target was 500. And I can see both being entirely possible here, because I know the targets on gold were like 8 to 10,000. Silver used to trade at 15 to 1 to gold. It's produced, you interviewed Keith Neumeyer, he said we only produce 7 ounces of silver for every ounce of gold. Why is the price 90 to 1? Because it's been manipulated for the last 50 years. And those guys are all still short. They can't get off their shorts. The demand for silver in the March contract that just expired, which is open for delivery, not expired, but open for delivery, they nominate for 76 million ounces of silver for the March contract. We don't even produce 76 million ounces a month. But on COMEX, that never used to be a physical exchange, they're delivering a month's supply of silver. That's a new entrant in the game that already has a deficit of 200 million ounces. So there's just no doubt in my mind we will breach the resistance at 33, and we will just ultimately fly here.
You're talking about the sort of gold-silver ratio and how it's much wider than perhaps it should be. I mean, we go back 200, 250 years, Adam Smith and the Wealth of Nations, I think he said it's about 13 to 1, 15 to 1.
That's exactly what it was. Yeah.
Do you see that really contracting?
Yeah, that's what it should be. It should go to at least 15 to 1 or 12 to 1, which it was as a currency. It'll go lower if we're only producing 7 ounces of silver versus an ounce of gold. It could go to 7 to 1. It's probably going to overshoot one way or another once it breaks the entrapment that it's in.
There does seem to be sort of quite a few things that aren't going well or properly in the silver space. I think not too long ago it took 9 months for someone at Sprott to receive physical delivery of silver for a 5-day settlement contract. What are some of the things you think are wrong with the silver space or that need fixing?
Well, I think there's shortages. Guys are having tough times making deliveries. In fact, I'm a believer that when we all point out that SLV is losing ounces and this guy's losing ounces, I think it's the dealers and banks buying the shares and redeeming them to make delivery on the COMEX. That there's lots of demand for gold and silver. I mean, we get lineups in China and India and South Korea is running out of silver, and there's lots of demand in Europe. The demand is not as robust at the retail level in North America, but that can change in a dime. So I think once we break through 33, I think we'll have a big run here. Okay.
You've invested in dozens, if not hundreds, of juniors. How do you make your investment decisions, given the plethora of companies that are vying for your attention and a check from Eric Sprott? And are there too many companies out there?
quickly. No, I say that because I don't do them all quickly. But I'm a great believer if I see a company that's announced some drill result and I go to their website and look at their presentation, I can reasonably quickly assess how opportune the opportunity is vis-a-vis all the other ones, okay? And I'm looking all the time, every day. I look at 2 or 3 companies, probably more than that. Of course, I know a lot of them already. The fact that they're in silver and gold, of course, that's the first check mark. One of the other check marks I love, by the way, is that nobody follows them. No brokers follow them. That's a perfect one. And because I'm just assessing what the ore body's telling me, okay? And I know the price of the product. Now, how good's the ore body? So I don't think it takes a lot of time to realize how undervalued it could be. And I'm a patient investor. So, as I say, when I look at a NAV, I can find lots of stocks trading at 1/10 of NAV. And the NAV calculation is typically a very conservative calculation. You know, they take the price and, like a lot of guys use 2,000 as the price for gold. Well, it's 2,900. That means the NAV is twice what you're telling me it is, just based on price. So it's not too hard to find things that are of interest.
Okay, you have a lot of 9.9% stakes in companies. What process do you go through to increase that to sort of over 20%? You have over 20% in some companies, such as you recently did with Aftermath Silver. Is there an additional step that you go through?
Not really. I don't lock myself at 9.9 for sure, okay? 19.9 is another question because when you go through 20, you're only allowed so many transactions in a year. I think it's 5 transactions in a year. So you better make them significant. You don't want to be going out and buying 5 by 100 shares. Those are your 5 transactions. You're maybe hoping that some strategic guy's going to sell if you want to go higher, and or the company wants to do an issue. And I have lots of companies. I'm through 20, and lots of companies through 10. I don't have a plan to sell them. Typically when I buy, I don't have a plan to sell them. I have a plan to let them appreciate and grow and have someone buy them from me. You know, somebody come in and buy them from me, some takeover.
So, okay, for some of your bigger positions, okay, I understand that, but what would be you're in dozens of companies, so what's your exit strategy generally for?
It's the same one. Like if I'm only buying a company because I think it's dirt cheap, okay, and I know I could buy more. Let's say I put $2 million in. I know I could put a hell of a lot more than $2 million in, okay? And if $2 million took me to 9.9, fine, maybe I'll go to 19.9, then I gotta, it's not my choice to go above because I gotta have an opportunity to go above. So I know I'm gonna hold them for a long time because every time I buy them, I think they're just dirt cheap. You know that I could have a 10 or 20 bagger here. So I'm in no rush. I have half the things I own. I don't even know I own them. You know, and then a news release comes out. Do we own that one? Yeah. Like if it's got silver in front of it, I normally own it. Okay. Anything to do with silver. You imagine if silver goes to some of those targets I mentioned. You can own any one of them.
Yeah.
And you're going to do well.
Okay.
Yeah.
Now, in 2018, 2019, you reinvested a large amount of your gains from Kirkland Lake back into dozens of precious metals explorers. And some have said that given where the market was at that time, you sort of single-handedly saved the junior exploration space. Was that a conscious strategy, or was that perhaps more akin to Warren Buffett's maxim of being greedy when everybody else is fearful?
Well, I don't know how fearful they were. All I know is I had a hell of a run in Kirkland Lake. I took a lot out of it. I wanted to redeploy it in the area that I have most interest in. I typically don't buy big stocks. So the field I'm in is like less, 100 million or less is typically what I would do. So, you know, if you had 100 million to invest and you got to buy little guys, you need to buy a lot of little guys to get your money back in. So in the case of silver, and there are very few silver stocks, like there's very few. So I might have been a little bit freewheeling when it came to buying silver stocks. Just because I just have this great view of silver. You know, hopefully I get to look back and say, well, that was easy. So.
As I mentioned, you sort of seem to have carried the entire junior space for sort of moments of time. As you look ahead, who's the next Eric Sprott? Who do you see coming through the investor ranks who's potentially going to be a game-changing investor in the future?
There's a group that, I'm trying to remember their name now. They do a podcast every week. Crescat. Crescat is a smaller firm, hedge fund. I don't know what city it's run out of. Quinton Henning is associated with them. And they buy a lot of things, a lot of small companies. And I would imagine that if they could get the cash flow in that customers might ultimately do if they all think gold and silver where you got to be, they could easily be a significant replacement for me. I don't know how much they have invested, but I know they're active.
Okay. You mentioned this a moment ago about US President Donald Trump, tariffs, which may or may not happen tomorrow and how big and whatever. Is causing a lot of disruption. What impact do you think that will have on the gold and silver sectors and obviously the companies in it?
I don't think it will have any impact on gold and silver, other than one perhaps. The big impact it might have is this whole world economy is going to shrink if we've all got to deal with tariffs, okay? It's going to be a nightmare for everybody. So if the world economy shrinks, maybe the ultimate bear market evolves quicker. And a bear market is the best thing that could ever happen to gold and silver. Those stocks go up when everyone realizes nothing's working, because gold and silver will be working.
Okay. Well, Eric, let's end with a forward-looking statement, if I may. Where do you think the precious metal space will be by the end of this year?
Well, I'm sure gold will be well north of 3,000, and I would hope that silver will be north of $50. And I would think the stocks could easily put on another 25 to 50% this year. It's my hope.
It's looking like a good year. Eric Sprott, thank you very much for joining us today.
My pleasure, Paul.
And we have a lot more to come from the 2025 Prospectors and Developers Association Conference here in Toronto in Canada. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of PDAC is brought to you by Gold Mining, Uranium Energy Corps, and Uranium Royalty Corps.